If you've ever looked at a financial chart, you've seen them, right? Those little green and red bars called candlesticks. Each one tells a tiny story about the battle between buyers and sellers. But some of those stories are way more dramatic than others. See, most of them have these little lines sticking out the top and bottom, the wicks or shadows. They show you the price extremes for the day. But every now and then, you spot one that's just solid, no wicks at all. What on earth is that supposed to tell us? Well, believe it or not, that missing shadow is actually one of the most powerful signals you can find. It has a name, and it has a very, very specific meaning. It's called a Marubozo. A Marubozo is basically a candlestick that's all body and no wick. What that means is the price opened at its lowest point for the day and closed at its absolute highest, or the other way around, with a zero fluctuation beyond that range. Put simply, it's a sign of pure, unfiltered conviction. It's like the market has totally made up its mind for that period. And get this, the name itself is the perfect cheat sheet. Marubozo is actually Japanese for close-cropped or bald head. Isn't that a perfect description for a candle that looks like its wicks have been completely shaved off? It's a fantastic way to remember what you're looking at. So this signal of total conviction can point in two very different directions. Let's break down the two types of Marubozo you're going to run into.
First up, we've got the bullish Marubozo. It's white or green, and it happens when the opening price is the absolute low for the day, and the closing price is the absolute high. This means buyers were in complete control from the second the market opened to the second it closed. Then you have its evil twin, the bearish Marubozo. This one's red or black, and here, the open was the high and the close was the low. Sellers just dominated the entire session. It wasn't even a contest.
Okay, so how do we actually use this thing in the wild? Well, the first and probably most common way is to see it as a powerful confirmation that a trend that's already happening is still going strong. So let's just imagine an asset is already in a nice, steady uptrend. Prices are climbing day after day, and the mood is pretty optimistic. And then, right in the middle of that climb, you see this, a solid green Marubozo. No wicks, just pure, unadulterated buying pressure. Now here's the crucial point. This isn't a sign that the trend is getting tired. Nope, it's a signal of acceleration. It's the market practically shouting that buyers aren't just present, they are aggressively pushing that price up, and that momentum is very likely to keep on going. But, and this is where it gets really interesting, that exact same pattern can mean the complete opposite, all depending on its context. It can also be a powerful reversal signal. Okay, now picture the opposite situation. An asset has been falling for days, maybe weeks. The sentiment is negative, sellers are clearly in charge. Then, at what looks like the very bottom of this fall, this powerful bullish Marubozo shows up, seemingly out of nowhere. This is exactly why context is everything. That same bullish candle now signals a dramatic shift in power. It suggests the selling pressure is totally exhausted and a new, powerful wave of buying has completely taken over, potentially kicking off a brand new uptrend. Now, before you start hunting for Marubozos on every chart you see, there's a really important caveat. This is a powerful signal, for sure, but it's not a magic bullet. There's one major thing you absolutely have to remember. Just one. A Marubozo is just one signal. It's one day's story. It's just one piece of a much, much larger puzzle. So the candle shows you the open and the close. It shows overwhelming conviction, right? But what it doesn't show you is the fight that might have happened during the day. Was it a smooth, steady ride up, or was there this huge, volatile price dip and recovery that just happened to end at the high? The Marubozo hides that intraday story. It's a snapshot, not the whole film. And that's why it's so important not to rely on it alone. Okay, so let's lock in the key takeaways here. Marubozo means no shadows and powerful market conviction. Bullish means buyers were in total control from open to close. Bearish means sellers. It can signal that a trend is continuing or, depending on where it shows up, that a major reversal is on the way. But the golden rule is this: never, ever use it in isolation. It has to be part of your broader analysis. Ultimately, the Marubozo trains your eye to look for one thing: conviction. It's the clearest visual sign of a market that has made up its mind. So the next time you're looking at a chart, ask yourself, where's the conviction? And now that you can see it, what other patterns are going to start jumping out at you?